Time for the big brokerage call of the day. And all eyes are on Polycab after Jefferies and UBS has reiterated the buy ratings and raised the target prices. Harsh Johnson with the key reasons for this. Harsh.
Well, yes, I want to start off with the kind of numbers that they've clocked and the target prices which have been increased, because it's really a solid increase both by UBS as well as Jefferies. Difficult to pick between the two. In terms of Jefferies, they've hiked the target price from 7,150 rupees a piece to 8,180 rupees a piece, and this is even before the con call has come through. UBS as well, from 7,150 they've hiked the target price to 8,100. So very strong increases in target price. Jefferies calls the execution extremely strong. Q1 was obviously a beat, good operational performance as well. What they're saying stood out was the FMEG sales, both on the top line as well as on profitability. Both has delivered in terms of FMEG. The growth there was 18%. Cables and wires, which is a larger part of the business, the growth was extremely solid at 31%. Both of those a strong beat. They estimate a 25% PAT CAGR for this one. From FY25 to FY28, they've hiked the multiple from 33 times to 35 times, therefore adjusting the target price. Even for UBS, very similar. FMEG growth faster than expected, margin improvement better than expected. They're saying demand coming from power T&D, data centers, real estate, market share gains in cables and wires is a positive. They're raising earnings multiples by 6% FY26, 5% FY27, 4% FY28. They've hiked the target multiple from 35 times to 36 times, and therefore that target price.
Got it. All right. Thanks so much, Harsh, for that. In fact, Dharmesh Kant of Chola Securities joining us this morning. Dharmesh, very good morning to you. What do you think about Polycab? I'm sure you saw the numbers. Commentary seems to be very rah-rah, if I can call it that, at this point in the morning. It's up about 1.5%. Do you agree? And do you have a buy on it?
Yeah, good morning, Alex. No, we don't have a buy on this. And the reasons being, I do expect that 15-17% kind of a growth for next 2 years will be given for all these companies who are into cable wire manufacturing. But the point is, the way copper prices have gone up this year, the margins are definitely going to be under pressure from Q2 onwards. So Q1 till Q1, they have an advantage of inventories at their place. But you will see the margins getting hurt from Q2 onwards, and valuation-wise, just very expensive. I mean, I agree with this foreign brokerages that 20% kind of a CAGR should be there, but at 20% kind of a CAGR, you are giving a valuation multiple of say 35 or 40. I mean, 1 or 2 years forward, which translates to around 50 on a TTM basis. And then you have a competition setting up in next 2 years. So it's a trading play. I mean, liquidity flows and positive sentiments and reports can have it up 4-5% up from here. But it's not a structural wealth creation play from here on, to my mind, at these kind of valuation multiples.